Hey there, everybody. Thomas Wood with ValueCharts.com. It is Tuesday, March 31st, the end of the quarter, and I wanted to point out one of the trade setups we had in the futures trading room earlier today in the 30-year bond market. Now, what we were looking at, this is just an intraday setup, but you can trade this longer term if you want to. If you're going for swing trades, just look at a daily or a weekly. And the setup was a bullish divergence. Now, what a bullish divergence is when we have weaker prices. So our prices here are lower, where the blue arrow is, lower than where it is over here. But if you go down and look at the MQ momentum indicator, you can see we had significantly higher indicator line, significantly higher histogram. We went all the way down, hit significantly undervalued, which is the lower red price bar segment, and then we ended up reversing straight back up, rallying very nicely up, and we had a target of the resistance up at 164. It ended up stalled out at 164 for a little bit, poked above it, and now has since pulled back and then gone sideways. Either way, ended up being a really good trade. You're talking almost a point. Just under a point, but several $100 contract in a matter of about an hour or so. So nice job for those of you that were in the room that took the trade. Worked out really well. Now, looking at bonds, the interesting thing about what bonds are doing is just like this is a bullish divergence, a bearish divergence is the exact opposite. Well, if you look at a weekly price chart, and you can see we trade a lot of bonds because I got price lines everywhere because I was using an intraday chart. But if you look at a weekly and look at where we are right now, we've gone overvalued. But if you look at the momentum, you can see the significant weaker momentum on the indicator line and on the histogram compared to the previous rally, which was over here. So we're actually looking kind of bearish right now in bonds. Now, this is going to be interesting to see if it plays out or not because of what the indices are doing. The indices are sitting around top of trend lines on the weeklies. So if the trend lines on the weeklies hold, then we should see the indices bounce and bonds go down. If they break, though, we should see bonds go back up and indices come back down. Don't forget, as well, on Friday, we have non-farm payroll. Even though it is Good Friday, we still have non-farm payroll. Futures markets will be open for a few hours as well in the morning. So just be aware of that also. Don't forget, you can follow me on Twitter and on StockTwits at Trades with Tom. You can also get a membership if you want to come check out the trading rooms. Just go to valuecharts.com/go. That's valuecharts.com/go. There should be a link at the bottom of the video here on YouTube. So that's it for today. And until next time, happy trading.